In this conversation, I interview Matt Erley, co-founder of Old Time Capital. Matt discusses the shift in golf's accessibility, the importance of new formats, and the relationship between founders and the industry. Matt outlines the investment philosophy at Old Time Capital, emphasizing the need for a business-first approach in the golf sector. The conversation concludes with insights on navigating the golf ecosystem, the significance of validating business ideas before diving in, and practical advice for aspiring entrepreneurs in the golf space. I hope you enjoy the episode. Welcome to The Range, the podcast where we explore the intersection of passion and business in the world of golf. I'm your host, Ari Ratner, and each episode will dive into the stories of the innovators, entrepreneurs, and trailblazers who are transforming the game we love into thriving businesses. Whether you're a golf enthusiast, an inspiring entrepreneur, or just curious about the business behind the sport, you're in the right place. So grab your clubs and join us on The Range as we tee off into the world of golf entrepreneurship. Welcome back to another episode of The Range. I'm joined here by Matt Erley, co-founder of Old Time Capital. Matt, appreciate you jumping on.
Thanks for having me. Great to be here.
My pleasure. Just to give a little background, I came across Old Time Capital on LinkedIn as I'm pursuing my entrepreneurial venture in golf, was looking at potential investment groups or people that are in the space that are looking at startups. And I came across Matt's profile, shot him a note, and we connected a few months ago, and really excited to have you on to learn more about the business and your background in not only the sport, but in entrepreneurship as well. So with that being said, would love to have you introduce my audience or this audience to Old Tom and give a little bit of sense into what the business is about.
Great. Yeah. So I come from an operating background. So spent most of my career building startups. So was on the early team at Drizly in the alcohol delivery space. And then another company called Havenly. It's the largest online interior design marketplace. So did a lot of stuff in sort of the marketplace world as an operator. And my business partner, Evan, he co-founded a company called Random Golf Club that a lot of people know in the golf space, pretty popular like media content business. And so we had been talking about just what was happening in golf in terms of all this momentum around the way that the game was growing and changing. COVID was a huge catalyst for that. But long before COVID, you had off-course entertainment and these new versions of golf that people were starting to have new entry points into golf, right? Like previously, you would have had to go to just a traditional golf course or driving range to kind of start to play the game. But so many golf entertainment concepts have been allowing people to be introduced to golf. So that was where this boom around the game kind of came from. And so we were seeing all that and interested in where the funding was going, where capital was going in golf. And through a lot of conversations with founders and people in the golf world, we sort of realized that the ecosystem, there wasn't a strong ecosystem of funding. There was money going into golf, like green grass, golf courses, golf course acquisition, real estate, but very little going into this new ecosystem of founders building around, whether it was things like golf entertainment, agronomy, software, like how parts of the golf world are innovating. And so, yeah, we just thought, hey, there's an opportunity to participate more actively in this, to bring investors in. We wanted to invest personally. We wanted to bring our network into the golf world. So we built Old Tom Capital a few years back and started to go out and invest in some companies through a large group of investors that we built. And now 3 years later, we did 10 investments over the last year and a half, starting to kind of move into opportunities in like private equity in golf and growth capital, and still funding venture stage businesses in golf. But it's been a great ride and really trying to be the most strategic and active investors in the golf space. There's not a lot of money still going into golf. Our job is to fund companies and to also go out and convince outside investors that golf is an interesting and high return environment for them to put their dollars, and that it's not just this sexy space, where maybe historically there's been a lot of like trophy or vanity investments just because people really like golf. But actually golf is a wonderful place to invest, and we can dig into that more. But there's a lot of signs that golf is continuing to develop as a great place for investors to get involved.
Well, I think it's interesting you bring up the evolution of the sport and how it's expanded off the traditional sense of the 18 holes. And I think that, to your point, starts to broaden the investment opportunity and even the business opportunity for entrepreneurs. Is it's not just building businesses around the golf course or the traditional golf course. It's building businesses around all the other ancillary avenues within or around golf, which makes it exciting from an entrepreneurship standpoint, but also from an investor standpoint, I imagine.
Yeah, it's I think our ability to identify the right pockets in golf and invest in those places where there's a large enough market, there's enough return is obviously extremely important. And what we tend to invest in is not the traditional side of golf. There's nothing wrong with the traditional side, and there's a lot of great businesses that are being built there. There's a lot of people doing well and making money on the traditional side, but it's just, if you look at the scale in golf, that's sort of the smaller pocket now, especially if you look at things like not just the traditional side, but the avid golfer, the low handicap golfer. I think there's around 4 million golfers in the United States that have an official GIN handicap. Mm-hmm. Like, that's a pretty small number when you look at the total number of golfers being in excess of 30, 40 million. If you start to kind of expand out into who is a golfer, somebody just makes up a club at a Topgolf, and then in that 4 million that have a official handicap, like how many of those are, let's say, single digit handicaps? Well, now you're cutting down to multi-hundred thousands of golfers. And so we see a lot of companies building specifically for that golfer, which there's not an issue with that. It just doesn't represent a large enough piece of the pie necessarily for a institutional or a venture investor to want to get involved, because you're talking about, let's say it's in the coaching space, the game improvement space. And now you're looking at like even smaller slices of that pie. So I think there's an issue with just niching down too much in a category like golf where it's already small by the standards of how an investor would look at it. And so that's why when we think about the consumer side of golf, for example, this golf curious, as we've kind of branded it, entry point of people who are, they're playing, but they're not playing traditional golf. They're sort of thinking about where golf is going. They're thinking about, they've had some fun at a Topgolf or a punch shot or a driving range or a par 3 course. And now they're thinking like, well, what's next? What do I do next? Yeah. That's a big group. That's like tens of millions of people. And that's also a group that hasn't been captured yet. Like, we think a lot about the lifetime value of a golfer is pretty significant, because once you flip to play golf, you don't really churn. You just kind of accelerate. You just continue to play more and more. So there's a big prize for those people who are attracting those new players and people coming into the space. And so I think that is why we get really excited about that side of golf. And honestly, that's probably the most resilient area, because people who are coming into the game are probably going to be here for a long time. And so we just think that that's one of the more exciting areas to invest.
Well, and I think that brings up a great question that, I picked up golf when I was around 40, and I grew up on a golf course. So, I kick myself in the butt every day thinking about years wasted. But the reality is I picked it up late in my life, mid-stage of my life, and have fallen fast in love with it. And as you think about the access or accessibility of the sport, through one of your investments, you have DriveBox, which brings golf to people in multitude of different areas or other events to allow them to experience golf. But then you also have the younger generation picking up clubs, I think, at a larger scale than our generation. Talk a little bit about that accessibility, what it means to the sport, and from an investor standpoint, what it means from a return on investment.
Yeah, it's very correlated with this perspective of wanting to invest more at that entry point of new players. Golf has not been historically accessible just in terms of how you play golf, because it's been pretty polarized around golf is played on a traditional course in a traditional way, and it costs a certain amount of money. So these like areas of like golf light, like these areas where golf is actually can be played, but it's less expensive. It's maybe a little more casual. It's faster. Those things are important because they are allowing a new player to have interest in the game. I love a traditional format of golf. I love going out and playing a 4-hour round and on an 18-hole course and doing that. But I have found that as more formats pop up, that I actually really like those formats as well, where I can go out and play golf or experience golf for an hour or 30 minutes, or there's things that are more of a light version of golf. So I think the accessibility side and these new formats are deeply correlated. And then if you think about it with your investor hat on, well, those are just the more scalable sides of golf. And so if I'm looking for scale, if I'm looking to invest in categories that have momentum and upside, then I'm probably not investing as heavily in the traditional game, because you can only build so many more 18-hole courses. Like there's only so much more land. There's only so much more, so many more people who are wanting to do that, or private clubs are at complete capacity. There's, only so many people have that amount of time. So where is golf moving? Well, and this doesn't have to disrupt traditional golf, but I think golf is moving more to those golf light formats, par threes, executives, putting concepts, driving ranges, at home with big clubs, like, I don't know, in tennis ball, it could be anything. Like what's the pickleball? We've talked in other spaces around like pickleball for golf. What are versions of that are going to be played? Like pickleball didn't disrupt tennis. It just added a new format in where now more people are playing. If you look at pickleball and tennis together, like that is such a big number. It hasn't cannibalized tennis. It's added new people that want to pick up a racket and play something. So I think there's things like that are going to be changing how golf is played. And, traditional golf, 150 acres that only, I don't know, a couple hundred groups a day or individuals a day get to go out onto that golf course. Like that's also that we don't have the land and the infrastructure available to continue to have that be the growing side of the games. We need to look more at things that are lower footprint, lower costs, faster. And again, that doesn't jeopardize the traditional format of golf. That doesn't make that, we don't have to be concerned about that going away. It's just, it opens up a new side of things.
Well, I actually think it services the traditional side of golf, right? I think you get more people into the sport. They're more willing to want to experience a 4-hour round or 18 holes or whatever. But I think the key is the accessibility and getting people in a way that is how they want to experience the sport. Yep. Let's go back a little bit and talk about you and Evan, your relationship, how you guys got to know one another, and the pivotal point where you said, okay, enough discussing going into business together. Let's actually do it.
Yeah, I've been a fan personally of what Evan built at Random Golf Club, because it was early days in YouTube golf and alternative media formats in golf. Where everyone was still kind of watching traditional PGA Tour linear television golf. And what Evan and Eric did at Random Golf Club is they were challenging that way of viewing golf and bringing new storytelling and casual viewing around golf and more of a lifestyle perspective to it. So I was a big fan of that. And as I think now us around what we're doing, it was also what he was building there was really building the entry points of players coming into the game, which is now we're spending a lot of time investing in. And so we met just through some other folks in our network that knew we were both thinking a lot about how to invest in the space and how to support founders and entrepreneurs. And so we just started to form a friendship and talk about what we were interested in doing and just started working together. I mean, I think for finding a co-founder in anything, it requires, it's like a marriage. You got to date, you got to make sure that you're the right person to be spending an inordinate amount of time together, and that you're going into the battlefield a bit with this person, and you're going to experience a lot of highs and lows in building a company. And our business is no different from that, right? We're an investment firm, but it's all about creating momentum and speed and scale and building success off of that. So we spent a lot of time just making sure that was going to be the right relationship for this kind of thing. But yeah, I think each of us just bring really different experiences into the space. But what we share is a commonality around being operators, and that it gives us just an interesting viewpoint in investing in companies because we know what it's like to build companies and to raise capital and to be on the other side of the table.
Yeah.
And so that has allowed us to invest, find the right companies that we think are quality companies to invest in that are going to create scale, and then to get involved in those businesses and help de-risk them and help actively participate in what they're doing in the golf space. So yeah, it's been a really, really good relationship and one that we're excited about continuing to grow the business together.
Yeah. I think oftentimes, we hear about the successes or failures of businesses, and you don't talk about the importance of having that honest and respectful relationship between founders. And it certainly sounds like you and Evan have that. Before we jump into the philosophy behind Old Tom, talk a little bit about your connection to the sport of golf. When you first picked up the sticks, how long you've been a golfer, and how you consider yourself in the ecosystem of golf, from your hardcore single-digit handicap golfers to your kind of entry-level golf.
Yeah, I've been around golf my whole life. I grew up just on a neighborhood course, nothing fancy, public access, and that's where I learned the game. That's where I played the game through high school. I've just had a love and respect for the game for a long time and have been around it. I would fall more into the traditional golfer bucket, like low handicap bucket, but I constantly remind myself that is a very small portion of what percentage of what a golfer is. The ability to take to look at things and be able to remove your own biases from those and how you want to play the game and how you want to experience the game, I think is really important. And so I do that every day, right? I mean, I think there's this, you want to respect the history that's in golf, but you also want to be a part of the change and the evolution of it. Mm-hmm. Golf's been around for a long time, but there's no guarantee that it's going to be around for another 500 years, right? Yeah. Like if we want that to be the case, then we have to think about what players want, what the new version of golf might be, and how that evolves over time. So I think that's a philosophical perspective that I have every day is what that looks like. I think it's also, I really love golf. I love playing. I'm a consumer of golf. I'm a viewer of golf, but separating that love for the space for the practicality of building a business. Mm-hmm. We're doing this at Old Tom Capital because we think that there is a big opportunity to build and invest in the next generation of great companies in golf. And we think there's a lot of upside in that. And that is extremely important for us to be coming into this with that perspective and not, hey, I just really love golf. I want to be around golf. I'm very excitable about golf. Like, those are all true.
Yeah.
But we're not here because of that. That's a secondary component of this. We're here because we think there is massive arbitrage in the golf space, and that very few investors have considered this as a good place to participate and invest in. And I think the same thing goes for founders. Founders, it's okay for them to have most founders have a love and a passion for the game if they're going to spend that much time kind of in and around golf, but they need to remove that love and fanatical perspective at times to say, hey, what am I building? Is this the right company? If I removed the love for golf, would I still want to build this business? Is this still a business that should be built? Is there upside in this business? I think those are all important questions to be asking. And we've asked ourselves that many times. And so I think when you're operating in a category that is really fun and sexy and where we're all kind of golf sickos, you have to make sure you are removing that bias and sort of the golf goggles that we call them, to just make sure you're building the right thing, because everyone around you is probably also a lover of the game, and they're going to tell you that what you're building is smart and fantastic and going to do well. But you have to have a little bit of a devil's advocate approach on all that stuff. So yeah, definitely a lover of the game, definitely a player of the game, but important for me every day to wake up and view this as a business and make sure that I am poking all the holes in this, and that I'm thinking about it from the lens of like who all these different personas of players in golf are and how we build towards what they care about.
Yeah, it's an interesting point, and one that I think will be super valuable for other entrepreneurs is thinking about their business from a business first standpoint as opposed to a golf first standpoint. And I think that maps to other industries as well, right? Like as an entrepreneur in any industry, you want to make sure that your business is set up properly. The financials behind it are profitable or can get to profitability, and focusing on what it takes to get there, as opposed to using a business to get an invite to Augusta or using the business to play around at Pebble Beach, whatever, right? Like I think focusing on the business is really important to kind of hammer home with other entrepreneurs. As you and Evan think about or talk about your philosophy, your investment philosophy around or with Old Town Capital, give the audience a sense of how you look at young businesses, how you evaluate them, and what gets you most excited, without getting into specific businesses, what gets you most excited about the near term and long term future of the sport from an entrepreneurial perspective.
Yeah, there's definitely a rubric that we think about. There's a lot of companies. We see a lot of pitch decks. We get emails every day that are not even, it's just, hey, I've got an idea, I've got a perspective, which is amazing. And we try to have as many of those conversations as we can. But at the end of the day, we are stewards of our investors' money and our own money. And so we have to make decisions around return. And so the things we look for most importantly are, how big can this business get? When you start to bring in outside investors at an early stage where there's inherently a lot of risk, the expectation of return is pretty high. And so we're constantly evaluating, is this part of the market that the company is building in large enough to sustain a big business? And can you go actually capture a big enough business in that market? So the TAM, the total addressable market element is really important. That's part of my comment earlier about niching down too much in golf. If you're tackling portions of golf that are a bit smaller, then it's harder to build a big business. And that doesn't mean you shouldn't build that business. It just means maybe you shouldn't raise venture capital to try to raise that business, because we're going to have a pretty high expectation of return on that. The founders, obviously at an early stage, matter quite a bit, and are these people that we trust taking dollars to. We can't micromanage founders. So you're giving someone a lot of money and trusting that they're going to go do what they said they're going to do and that they're going to be able to pull it off. That matters a lot. And so we really evaluate that. It needs to touch golf, but it doesn't have to be golf only. Honestly, many of the companies we've invested in they have a narrative in golf, or they have a portion of their business in golf, but they're not just a golf business. And that opens up the addressable market quite a bit for us. Which makes investments a bit more, they'll pencil a bit more. Example of that is our last investment we made at the end of last year was TerraRad, which is an agronomy tech company. They built moisture sensors to look at the moisture below the surface of the ground. So essentially it's a sensor that sits on the back of the primary mowers, and it's constantly looking at like inch wide pixels of the moisture down to root depth across their golf course. So incredible business for golf, like so needed in golf. Nothing else exists in golf. Agronomy team can come in and look at basically a heat map of their entire golf course with pinpoint accuracy of where moisture levels are across the course. Super important. Big business just in golf, but you can imagine where else that plays. The larger agriculture space, construction, thinking about like moisture below road, roofing, right? Like all the data centers that exist out there. Like if you had an issue with moisture below the roof, you'd have to tear up the whole roof. Well, now you could have pinpoint accuracy. So my point is that is a golf narrative, but it's not a golf company, which for us allowed us to reach conviction around that a bit faster, because we just felt that there was a much larger market outside of golf that could be accessed. So I think those are some of the most important things. There's definitely categories within golf that we have more interest in and less interest in. We don't, I can get into some of those, but it's more just we have to form our own sub narratives in golf. It's kind of not like, hey, this golf curious space is most more interesting than traditional golf, as an example. Well, that doesn't mean we're not going to invest in companies in traditional golf. It just means they probably are going to be a bit more scrutinized in the addressable market that they have versus golf curious. Another one is within golf curious is golf entertainment. Mm-hmm. Golf entertainment, it's doing well right now, but I would say that it gets more scrutiny from us because golf entertainment lacks a lot of the retention that you would see in other portions of golf, right? Like people really love to go to golf entertainment spaces like Topgolf and others, but retention is challenging because how do you get that person to want to come back 2 or 3 or 4 times or more? Maybe they're going to go somewhere else after that. Like axe throwing and darts was entertaining 5 years ago. Those places have kind of gone away. Like, is that going to happen in golf for golf entertainment companies? I don't know, but you've got to like put a much more scrutinizing lens on that versus we think about golf light. Mm-hmm. Driving ranges, par threes, kind of these access points that are pretty stable. They have high retention. It's like someone who wants to come back. It's a little more of like a high retention golfer that likes playing golf a bit more. So I think we're constantly forming narratives within golf that guide us a little bit in how we look at companies. In some spaces, we're just like, the moment we see a company, we're excited to dig in deeper. In other categories, you're kind of like guilty until proven innocent, right?
Yeah.
So it's giving us some guiding blocks around that.
So I've been, since we've connected, less than a year ago, but certainly close to a year, I've kind of followed along the story and certainly the updates on LinkedIn. And I'm just curious, has the interest shifted from companies to where you're now getting a ton of inbound? And you mentioned that you're getting emails daily, but my assumption is early on when you and Evan started this, you were trying to go out and find companies to invest in. Has that shifted? And talk a little bit at how that has shifted over the 3 years you guys have been in business.
Yeah, I mean, it's a meteoric shift. Like it's in the first year we were pursuing anything. I mean, we were talking to anybody that would talk to us, right? It was we weren't even sure what was here. Are there companies raising money in golf? Are there good companies in raising capital? Who's, are there good founders? How do I find them? What do I do? We were just trying to reach out to anybody that was doing anything that looked interesting in golf and seeing if they take a call with us. Are you raising capital? What have you done? Kind of put our flag in the ground. Hey, we're a golf, we're an investment firm narrowly focused on golf. And you start to put that out there. And then I think when you occupy an environment that has not had someone that is so thesis driven around golf and that's deploying capital, and that also has kind of a different perspective on the space, then people over time start to pay attention, and I guess you earn the right to become something in that space. So that has happened faster than I think we expected. And in retrospect, I think it's because there just has not been a lot of folks in the space that are doing what we're doing. There's some, and there's some capital sources and some other folks that we spent a lot of time with and that we've co-invested with. But yeah, broader sports investment firms, I don't believe have looked at golf and taken it very seriously, because most of those broad sports investment firms are investing in things like fractional team ownership of European soccer clubs and, media, things at the media professional level, league level of sport. And because that's a interesting place to invest, and those are big checks that you can write, and most of those sports are driven entirely by the professional side of those sports. Like there's not a lot of people who, I mean, you have youth sports when you look at soccer and football and basketball, but there's not these really, really valuable amateur driven sides of those sports, or it's hard to find companies to invest in, I guess, at those amateur sides. Golf is the opposite. Golf is driven entirely by the recreational side of golf. And so there's founders building companies there. And so we felt like that was a good opportunity for us to get behind golf, to be golf centric. And so that has led to immense deal flow that comes our way now. I mean, I think you putting out good content, talking about the space, talking about what you do, actually writing checks and people seeing that you're writing checks. And so, yeah, now it's just a lot of people, I think, know who we are and what we're doing. And if you search golf venture capital, which I'm sure is not a heavily searched term, like, we're at the top of that list. And so you're going to find us first, and you're going to, and so it's important that we have the best deal flow, because it allows us to have an exhaustive view of what's happening in the space. That's really important. If you were a software investor and you knew every single software company on the planet that was building, you'd have a pretty strong perspective on what the opportunities, what opportunities exist out there. It's not really possible in those broader categories, but in something like golf, it actually is. So we'd like to believe we're looking at 90+% of companies that are building and raising capital, but we're always trying to focus on ensuring that's happening.
Yeah, it's interesting that you bring up the comparison to other sports, and my mind initially goes to what other sports are trying to do to replicate what golf has done. So if you look at Topgolf as an example, I know that there have been at least talks about basketball venues that are similar, or baseball hitting ranges or batting cages that are trying to bring that high quality or higher value entertainment aspect to it, but nothing has captured an experience like a Topgolf or other golf experiences. And I think that speaks to the sport and the people that are interested in playing the sport or trying the sport out. It's different than the other sports that you had mentioned, like soccer.
Yeah, well, and golf inherently is actually pretty easy to try. Like, it's very, very difficult to master, and to it's very difficult to even be good enough to go walk out onto a golf course and play around golf. Like, it's incredibly difficult to do that. But it's not difficult to pick up a club and swing it and make impact with a ball one out of every few shots, right out of the gate. And so I think that married with the ability to, like, play the game in a simulator environment, or, like, you think about putting. I mean, putting is so simple. Anyone can putt. I mean, putt's been around for, I don't know, for 100 years probably. Like, people have been doing putt and putting around forever, and that's an entry point, right? Like, that's something you can do. I think a lot of these other sports are much harder just to take the first step of being able to go play basketball. I guess you could have, like, a little arcade game shooting hoops and stuff, but I think golf is one of the more fun and easy to discover, easy to play sports and activities out there. And so that's why it lends itself really well to that entertainment space. I do think that we have to, if we don't focus on what happens after someone is introduced to it and look for other ways to advance them into versions of the game, then we may look back and just say that was a fun fad that some people went out and swung a club, but, like, they have no interest in doing, 5 years later, golf is a complete afterthought. They haven't picked up a club since they did that. Right. Like, I threw an axe at a bar one time and it was pretty fun, and maybe it's a bad example, but I haven't done it again. And so, is that going to be the case with pickleball? Is that going to be the case with, I mentioned darts, or I mentioned like all these just fun activities. If we're wise, we look at the ecosystem of that space, and we build other versions of moving someone from just like a first time entry point to some recreational, version of that to get them more interested in the game. And so I think that's the opportunity right now with golf. We're having a moment. Let's not let this become a fad or a trend. Let's let this become a catalyst moment for the sport and really lock it in for a long time.
It'd be interesting to try to visualize what the evolution of a golfer looks like, and how they experience it from entry point to passionate fan or avid golfer.
Yeah. And I don't think and it's certainly not. Yeah. I mean, it's probably it's a circle that has lots of different versions of that, because it's not the advancement doesn't mean that everybody, I think most people coming into the game today are never going to step foot on a traditional golf course. Yeah. So
And then that's okay.
totally fine, right? Like they don't need to. They don't. But I think if they swung a club one time at a Top Golf and they never did anything after that, that would be a miss. That would be a miss for the industry, giving those people other versions of ways to play. The problem is that there are supply constraints in like public access, par threes, municipals, driving ranges, like things that are actually the easiest version of experiencing golf on a green grass or a whatever artificial turf facility. So that may also jeopardize the ability to advance people into other versions of golf.
Yeah, that's a good point. As we segue into kind of the last portion of the interview and really hone in on advice, because I think you come from a very interesting background as an operator, but now as an investor or leading an investment group. But before we do that, you talked a little bit about your latest investment. Talk a little bit about that initial investment and how you kind of quickly can talk from soup to nuts, how you identified them, kind of that initial conversation to deciding to invest with them and how that has been so far.
Sure. Yeah, I mean, Terrarat's probably a good enough example. We met the guys who are the founders of Terrarat probably over a year ago through another relationship in the golf space. And we had already formed a bit of a thesis or a narrative, as I mentioned, around like agronomy as an interest, as an interesting category within golf where we didn't see a ton of innovation happening. So if there was someone doing something there, we wanted to know about it. Water is also a massive challenge, as everyone knows, in the golf space. So there was a narrative around that. If there was something, and absolutely like thinking about it from the lens of like, conservation and things like that. Mm-hmm. As an investor, thinking about like water's a problem. So courses are going to close, or they're going to have to spend so much money if they don't own water rights, as an example, that there's probably a high willingness to pay for solutions that can allow a golf course to spend less money and still maintain good conditions around water. So we already had that perspective. So when we met the Terrarat team and they had built a tool that was solving for that and that didn't exist in the market, I think when you see something that is such a leap in innovation, specifically if you're looking at like a product that is such a leap, that really perks your interest. And currently the way to understand moisture below the surface is you literally go do like a point reading using, there's multiple devices you could use, but you literally have to just like check what's happening right here at this specific point on my golf course. Their technology looks at the entire golf course in the 3-hour period, call it, that the two primary mowers are out on the course. Yeah. And it does it in such a passive way that it's like, you can't even imagine that if a golf course knew that this existed, that they would ever think about doing the previous solution, right? So I think that is a very that really got us excited and interested in it. And then looking at the addressable market, looking at, hey, if these guys if they can get to 500 golf courses and 1,000 golf courses and 2,000 golf courses, like that's a really, really big business. And there are 14,000 golf facilities just in the US. So now you're saying, okay, well, if they could get to 10% penetration in the US, like you could build a really big business just on that. And I think that for us, that's like, okay, that's a practical growth perspective. That is a believable, reasonable, versus a lot of the stuff we see is like, the crazy, up and to the right, rocket ships, which maybe you'll be able to do, but if you can't do it, then I'm going to have to pay a lot of money to, for that loss. And so I think when founders are practical about how they're going to get there and it's believable, then we believe it, right? Yeah. And if they're not, if it's just a lot of talk about innovation and growth and, we're going to own the market and it's like, well, show me how. Just show me how you do it. Like, I'm a marketer just like everybody else. So, but that means I have a high, I have a high BS meter, and there's a big difference between being a founder that is compelling and selling the dream and somebody who's a bit delusional. And so I really love to talk to people who are practical. They're not delusional, but they're practical about a big opportunity. So we spent a lot of time in due diligence. We validated the concept within our network of talking to agronomy teams. I never take a founder's word for it. I go out into the market and validate what they're saying, and hopefully there's congruency there. And yeah, then we decided, when we got to conviction on it, we decided to invest, and so we wrote that check. And now it's step 2 is, let's make sure we're so involved that we can be helpful and de-risk that investment and be additive to those founders, and let them also just go build the business that we expect them to build.
And I imagine that, like you said earlier in the conversation, in addition to trying to capture the 10% of U.S. golf courses, the TAM of the other sides of the business are also very attractive. So your point of it not just being a golf business.
Well, those are kind of like, I view those as bonuses. It's like, because and it's a good point that you make, because if they're positioning that as like, they haven't gone into those categories, but that's a big part of the, if we had to own some of those other categories just to make the business kind of work, that would be a problem to me. Just golf makes this business work. Beyond that, that's where you're like, okay, this could be a 20x, a 50x, 100x return. But it's like, how do I just make sure that you're going to be able to do what I expect you to be able to do? And that is the practical side of, okay, well, we're starting with this golf market. For us to get 10% penetration, it's this many courses. That's pretty practical. Here's how long we think it's going to take. And then, beyond that, here's other versions of this that can really take us to the next level. And that's like, it's kind of a, I need to make sure that we're covering our basis on the first side of things. And then the other stuff is value add.
Yeah. Just out of curiosity, and to give the audience a sense of time, an average deal, and I'm sure it varies quite significantly, but from your perspective, an average deal takes how long from initial conversation to writing a check?
Yeah, I would imagine the fastest that we've had on that front is probably 4 or 5 months, just because it's not because we're belaboring something, but because that's how long these things take. I mean, I get a lot of calls with founders, and they're like, "Hey, we're looking to close, kind of get our commits in the next couple of weeks." And I'm like, "Well, then let's build a relationship." It's a bit suspect for me sometimes. Like the fact that you think that I can reach conviction and write a check in that period of time. Like I'm always pretty pretty careful with those types of conversations. Things take time. So if founders want to take themselves seriously, they should also ensure that they give things enough time for a relationship to be built, for there to be proper diligence. And founders should also do the same level of diligence on their side. And they should make sure that not all money is created equal. And so things take time. But honestly, most of our relationships, investments that we've made, have started probably a year before the check's been written, because also I like to start talking to founders before they need to raise money. I want to talk to people who are operating from a position of strength, and maybe they don't even, someone who needs money in 2 weeks to me is not operating from a position of strength, and that makes me pretty nervous. So I like people who are just thinking a bit more long term about their raise, and we're building a relationship. We're spending the necessary amount of time with people, because when we kick that off, we're going to really know what we care about. We're going to be able to work together and have a good partnership.
Yeah, that's awesome. I think that's great advice, and leads me to kind of the last portion of the conversation, and centers around advice. As both an operator and an investor, what are the key pieces of advice you'd want to share with entrepreneurs that are either in the space already or thinking of getting into the space?
My advice would be to first ensure that what you're building it's like you're ready to go fight for that business. Because when things get hard, I oftentimes just see that founders haven't spent enough time up front really validating and understanding if this is like, there's a lot of sunk costs involved in being a founder. Like you're just kind of like in it. So you're like, well, I guess I'm going to keep going. But I would recommend doing a lot of that work up front, that validation up front, before you quit your job and before you decide to go out and build a company and you still need to support your family and your kids, and before you need to go raise money and before you need to do all these things, like spend some time and just validate things. Like I'm not a burn the ships kind of guy. Like I think you can validate and start to develop a concept and then put something out in the market or whatever long before you have to say, I'm going all in on this thing. Like, I think sometimes people feel like, oh, there's this respect for like, yeah, you're all in and like no turning back. And I'm like, that's kind of psycho to me. Like, yeah. I think founders who can still feed themselves and feed their families, like, are operating from a position of strength much more than someone who is like, I got to go raise this money in the next 2 weeks. And so I'm frantically going around looking for that. Golf is also an incredible place to incubate something because you have full access. Like, it's not hard to find golfers. It's not hard to find agronomists. It's not hard to find PGA, club pros. Like, people will respond to your emails. People will talk to you. People will help you validate things. Like, so go out and ensure that there's actually a market for what you're building. I think there's another trap in golf where it's a lot of solutions looking for a problem. And that goes with the fanatical passion side of the sport. It's like, just because it doesn't exist in golf doesn't mean it needs to exist in golf. And just because something's really sounds fun or not like a novelty for you and your buddies on a course doesn't mean it's actually like something you should go build that enough consumers out there to build a big business off of. So just validate. Like, that's not shaming people out of trying to build something in golf. It's just simply saying, like, do your job and validate it, and don't launch something without being sure that you want to go for it. And you might come to people like us and we say we're not investing. That doesn't mean it's not a good concept. It just means there's probably too much risk for what you're looking for. But like, if you believe in it, go do it. But believe in it, because it's going to be a pretty hard road. And so you want something that you can wake up every day and really feel like you have an opportunity to go do that. And the last thing I'll add is venture capital should come at the right time for the right companies. It's not a solution for everyone. And I'm much more of a proponent of, validate, build as far as you can, make sure that there's a big enough market for it, put yourself in market. Like, don't come to a venture capitalist when you just have an idea. Like, we're not going to fund an idea. Like, I don't show some momentum, show some in market. And if there's a lot of great lifestyle businesses in golf that don't need to raise money that you can do well personally off of for yourself and your family. Yeah. And the moment you bring an investor in, like, we might change the business, right? We might push you too fast and too hard. And so just like, be practical about what you're doing. Money's not free. We have our own expectations of what we're looking for. And so just go validate, build, put yourself in market, create some momentum. And then, if there's a big opportunity there, then come talk to people like us and we'll get involved.
So last part of the episode is I like to ask just some quick questions to give the audience a sense of your background not your background, just your interest in golf, and some fun questions that are rapid fire. And then we'll close out by giving the audience just where they could find you online and Old Tom Capital across social, if that's cool.
Please.
Awesome. First question, favorite golf course you've ever played?
There's one that I'm just obsessed with that's in outside of Dayton, Ohio, called Moraine. I don't know why I love it so much. I just absolutely love that golf course. So I'm going to say Moraine.
That's awesome. You go out there for your wife, family?
Yeah. And I'll tell you, I've played, like, my cliche. I could give you some cliche answers because I've played some really good top 10 golf courses. Yeah. Just sometimes you show up at a place and you're like, man, this is special. And the fact that a lot of times I'll talk about Moraine and no one's heard about it makes it even more like, okay, I think this might be my favorite course. But
that's awesome.
Moraine. Yeah.
That's cool. What's the one piece of golf gear you can't live without on the course?
Yeah. I'm like a refrigerator in my golf bag. I carry a lot of snacks. So they just like a ton of snacks. And usually there's like snacks for my 3-year-old that are in there that I take from the kitchen. And so a lot of like Cheez-Its and like fruit roll-ups and the healthy ones that I like. But like all of those are, so I'd say like I can't live without snacks on the golf course.
Then good follow-up would be, what's your favorite snack or go-to snack as well as drink on the course?
My favorite snack would be peanut butter filled pretzels on the golf course. And my favorite drink is probably coconut water. Yeah.
Okay. Yeah. What's your proudest moment as a golf entrepreneur?
Good question. I think just the journey, like just being an entrepreneur is hard in general. Like, I'm an entrepreneur like anybody else building a company. We're building an investment firm. I think when I just reflect on like how hard it's been and what we've built, like kind of there's the highs and the lows, but when you stop for a moment and kind of see where you've come from and the momentum you've created, that's really, really special. But just even like closing my first investment, 2 years ago or something, I think just being able to do that, put something out there and get people involved and write a check, like, I was pretty proud of that.
That's very cool. Last question. What's the biggest lesson the sport of golf has taught you about entrepreneurship or business?
Yeah, just like trusting the process. Golf is so, you tee off and make that first birdie, or you make that first triple on the first, like whatever happens on the first hole kind of doesn't matter, because the entire process is going to have highs and lows. So I think it's just just allowing yourself to kind of trust the process, like, and be there for the experience and enjoy the process, like have fun along the way. I think we get pretty heads down a lot and like focus on outcomes. And on a golf course, that's typically a recipe for disaster. And so just being out there and staying in the moment, staying in your shot, staying in the hole. I think those are all pretty good metaphors for building a company.
Yeah. For me, it's always been about enjoying the small wins on the course, because I only have a few of them each round, but I think that's spot on advice. And, appreciate you joining the range and talking about Old Tom Capital. It's been, something I've been looking forward to doing. So appreciate the time. And before we jump, if you want to give people where to find you online and find out more about Old Tom Capital, that'd be great.
Yeah. No, thank you, Ari. Appreciate it. Fun to follow your journey too, and appreciate the opportunity to come on. You can find us at oldtomcapital.com. We're pretty active on LinkedIn, so follow us on LinkedIn. And I don't have any personal social media stuff that's worth following, so I won't discuss that unless you want to just see a boring guy named Matt being a dad, then you can find me. But yeah, look, happy to connect with anybody. You can find all of our contact info on our website for founders or for investors. And on the investor side, if people want to get involved in funding the next great companies being built in the golf space, be sure to check out our venture club, Old Tom Venture Club, which is our private syndicate of accredited investors who can get access to great opportunities in golf. And you can find that on our website as well. But appreciate the time.
Yeah, awesome, Matt. Appreciate it. And we'll talk soon.
All right. Thank you.